My final view, Vinay, and I'm sure you were asked by your clients as well all around the world about the whole event that took place around the Adani Group and the stock price meltdown that we saw. Now, what's your sense here, if you have a sense? By the way, standard disclaimer, viewers, Adani Group is in the process of acquiring 49% stake in BQ Prime, which is the platform that we're doing this conversation on. Be that as it may, Vinay, what is your view on what happened, the view on these stocks, if you have them, and the outlook ahead?
Sure. So what I'm going to tell you is what we own and what we probably owned a little bit earlier as well. So for us, again, it's all about fundamentals. Top down is important and bottom up is extremely important as well. We want to see a balance sheet. We want to see profitability. This is similar to the previous answer I gave you on, on tech platforms. If we cannot see the profitability in the next couple of years, there are times wherein we may not buy the stock, even if EV to revenues may look attractive. So there are two names or three names, linked up in this whole story of Adani, which has come up. One name which we like today is Adani Ports. Here and you're seeing an asset at 13, 14 times 1 year forward multiples. They have 20, 21 ports. They own 20% of the overall port capacity of India with 30% of market share. They have a very good quality auditor. So we've kind of, in our parlance, in the investment team of ours, we like that asset class. We liked it earlier. It's cheaper. So, we bought more. We like it today. And it doesn't change the story for it being, one of India's biggest logistic companies. And India is a growing country. So that's something which we like, and we've ticked the box internally as well. The other company which we like, which got caught, which is not an Adani company, but which got caught indirectly, was Container Corp, because one of the contenders probably for Container Corp could be Adani, and Adani was supposed to be, and Container Corp was supposed to be divested. We like that company today. It's net cash. It's got 60 to 65% market share, both in import and exports. As far as the overall rail transport is concerned, you would appreciate rail volumes are the way to go for any kind of product coming into or going out of the country, because it's probably the cheapest mode of communication. So a huge monopoly, and going by the way the capex in the rail industry is happening in the next 2-3 years, we think the earnings also would be driven positively. So because the stocks corrected, technically, it's something, a government-owned company got caught in this whole story. We like that name as well. The third is in the cement space. We mentioned your commodity story. So the way we look at the cement space is coal prices have come down, very similar to your metals story. Commodity coal prices have come down, but the final price of cement bags have not come down. So you could see 200-300 rupees per kilo advantage in the EBITDA for the cement companies. So if you're seeing some of the names which we liked earlier, be it in the Adani name, which have corrected, we are nibbling into them, because when valuations are 8-9 times 1 year forward EV EBITDA, cheaper than the price at which even Adani bought it by about 15%. It's worth a look. They're cheaper than the rest of the world, and the earnings growth momentum in cement industry, courtesy the Indian budget, seems to be very robust. So these are the three names we are looking at pretty actively.
Got it. Okay. My final question, you reckon this nervousness because of what's happened in the last 10 days is now behind us? From a market's perspective, I mean.
Hope is a better word, because you're seeing too many things happen, right? At one end, interest rates are moving up, which we just discussed. At the other end, you're seeing red hot labor data, and at the third end, people are screaming recession. So I would say that every month is a new challenge, both on the macro front. I haven't seen so much of macro data ever change. There was a huge hiccup, which came in because of what happened to the Adani Group, which is clearly, I would say, shaken up a lot of investors. Just hearing about it is unnerving. Hope is a better word that it's behind us. We're looking forward to seeing what the final outcome is. But as far as we are concerned, again, profit is king. Cash is something we want to see, and we will buy those stocks wherein we can see cash. That's a much easier way for investors to make money in the longer run.